Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
What's up, everybody? Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an absolutely amazing trading day yesterday. I'm coming to you on the road. I'm in Chicago, Illinois, having a wonderful, wonderful day. Remember, our Traders Army social gathering is this evening. If you'd like to join us, I will put a link in the comment section below where you can register. We're going to Top Golf, play a little golf, have a little fun, and get a chance to hang out and meet other traders. Let's go ahead and do what we do each and every day, looking at the same 10 to 12 futures markets from an educational perspective, identifying potential breakouts and reversals, and let's go ahead and get rolling. So starting with the S&P, as we do pretty much every day, we had our breakout occur yesterday, and our breakout level on the S&P above this blue line, this is kind of what we had been looking at. We had seen these higher highs and was looking yesterday at either a reversal back in this 15-minute level or a breakout up above here. And we did indeed get the breakout. Now that breakout, we got a move from 29.12 up to 29.32. So for about a 20-point rally off of our breakout trade. Now, once we hit our breakout trade, we then got to our supply level in the overhead area. This was the supply level that we had marked, and then got another move down. Now, once we got our move down out of the supply level, price basically went nowhere. So we have taken our stop and moved it down to this 29.30 area, primarily due to the 6-candle rule. The fact that we went nowhere for 6 candles was a good reason to move price down. So for those of you that are unaware, at Traders Army, we give you there are push notifications, so you can get push notifications when we have trade updates. So these push notifications for trade updates came out, and really the idea of these trade updates, we move things around. So for example, at 6:03, it said the ES has been basing for about 6 hours. If you're still in the short from our fair price value supply area, move our stop down to 29.30 and lock in a bit of profit on any remaining contracts. Same thing with the BP trade, which I'll get to a little bit later. So the point of this is that our trade updates tell us, okay, how should we manage these trades once we are in these positions? And these come out every single day. You can see we got a number of those. So the reason I wanted to highlight that is the fact that, both the long and the short were pretty good opportunities. And realistically, you are probably stopped out on this candle right here, which had a high of 29.30 half. If you didn't get stopped out and you didn't move that thing down, then you still might be in for a little bit of points. But now what do I need to do? So now I need to remove this line, I need to remove this line, and I need to remove this one. And I would normally convert this to a confirmation short, but I can't because, number one, our big picture is up. Number two, we've already hit it once and moved away. And number three, we've hit it and we've gotten a minimal move out of it. So I'm going to actually completely remove it. So actually, you know what, that being said, let's go back and look at the origin of that area, because the origin of that area that is supply, could become a new potential for demand once we break up through it. So this has a gap fill area above it that I think could become a magnet for price, right? Those gap fill areas do become magnets for price. So, looking at where we may get a reversal now, I've still got my 15-minute level down below me. I'm going to take a look at both of these areas in here to see if we get a little reversal at one of these areas. I've got my problem with this one is that we had a nice wick over wick level right here, which then price moved up. We moved up again, and then we came back down and retested this entire wick over wick level, and that was really our big speed candle move away. So I'm not going to use this level. I think that level's a little bit lower probability. I will take a look at this area right in here. Okay, now this area right in here, 2902 by 2906, I think still holds a fair amount of potential probabilities because we had a little bit of a breakout. That was really the origin of our breakout. We put our breakout a bit higher just due to this wick, but in reality, it was this whole area we're kind of fed by this breakout. So that's the level that I'm looking at the moment. The Nasdaq, we didn't quite reach our supply level, and in our trade update, you'll notice that we earlier in the day had said that the NQ earlier in the trade update from yesterday, I guess I get back to the top here, we said the NQ came close to the fair price value supply area we've previously marked, but since it seems so close and the ES is at the same level, we need to change it to a confirmation entry or invalidate if your rules say to do so. Now, we came very close to it, and that's why it was switched to a confirmation entry. Now what we can see is that we are basing just above this blue line that we have right here. Now, this blue line, if I go back a little bit further, was this area of resistance. Now I'm sitting here just above it. So if you want to try a short, remember your lower probability, you can try a short just below this area, knowing that it's going to be lower probability if I do. And I've got the same basic area down here that we had in the past. Now this is still actually off of our Monday long. Here, quick quiz: anybody still long from Monday? Because if you're still long from our Sunday night live trade room entry, then you've really gotten a nice run out of this position. And you know, if you're holding on to this thing from the whole way, because that was really our entry, was this one down in here from the live trade room on Sunday night. So I'll leave this area on at the moment. All right, next, crude oil. So crude oil, we also got our breakout on the triangle piece. I genuinely expected the breakout to happen the other direction, but in these triangles, you can get breakout one way or the other. Got a pretty nice move up. Now, when I go to a 4-hour, I see that I've got no definitive trend direction, really one way or the other. And so what I'm going to do at this point is I'm going to remove that line. I'm going to leave this one in here for the time being. If price comes down, remember I would need basing in front of that level, and I've got one up above here. So I've got two breakout positions in play. I don't really have any super strong reversal candidates at the moment. I guess I would go to this area right here as my best opportunity for a reversal, but that's pretty far away from current price. So there's money to be made on the way down if you choose to make it on the way down as well. Gold. So in gold, we had this little bitty 15-minute level in place yesterday. Let's go ahead and highlight this real quick. And this one, unfortunately, did not work out as clean as our other levels, as we popped right through the level. I would say your stop would have to go below the pivot. We actually stopped below the pivot and then rallied up pretty hard off of that zone. So that one did not get us the same results as some of the others. That's okay. Very small, less than, I think it was what is that, 30, less than 2 points on the stop out. So very small level on that position. Now when I go to the 1 hour, what do I notice about these moves? Well, when I look at these, the 1 hour, and even if I go to the 4 hour, I still have price moving higher. However, if I throw my momentum indicator on here, you'll notice that my momentum is getting weaker, right? Continuing that weakening of momentum. If I even go to the daily chart, you'll be able, you can see that we're putting in some upper wicks. And so what I'm going to look at on here is, I think there's a chance we're going to break out down. I'm just not willing to jump in on it yet, unless I get a strong reversal, candlestick. And to do that, I'm going to look for a 15-minute chart. So on the 15-minute, I do have this little area here, which was the European market open. And I'm going to highlight this one. Just know that it's slightly lower probability because of the fact that above us is the Aussie open up here, which is usually a better reversal point for gold. So if you get in, your stop would have to be above those pivots. Let's see, taking a look this morning at some of our currencies and commodity plays. Inside the ZN, which is our bond position, we got a price move down into here. We got a really nice strong move away out of that level. Wound up being like a 4 or 5 to 1 on that trade before then price coming back down. And so this one worked out pretty well for a nice little rally. And now we've gone below that. When I move this, look to a little bit of a bigger time period, we've broken. We've got something a bit lower on the hourly chart, but my 4-hour is not really giving me a signal yet to short. Now, there's certainly going to be some unknowns with the FOMC meeting today, so I need to be aware of that. So I'm going to leave this one be completely. In the Aussie, we got a rally up into our fair price supply area, and then price popped right through there for a small stop out. That one did not reverse exactly where we anticipated it to do so. And frankly, now we're sitting at an area that could become a breakout if we base right before that level. So keep an eye on that for a potential breakout yesterday. In the euro, we were looking at this euro level yesterday. Talked about what was the reason for why we wouldn't take this breakdown, and a lot of you answered correctly. No basing before the level. That's what we looked for. We needed the basing before the level as a reason to get into this position. That's really what I care about, is the basing in front of the level, and I didn't get any of that. The basing was way far away, but our supply level still stands. Inside of the Canadian dollar, we talked about this the same line we drew yesterday, so we didn't really add anything new to the Canadian. We are coming closer to our Canadian dollar reversal, but not quite there yet. And then in the pound and the yen as well, the pound, our 6 candle rule came into effect, as I showed you a little bit earlier in the trade feed for our updates. Price came into the level 1, 2, 3, 4, 5, 6. So theoretically, realistically, you should be stopped out at about a break even on this position if you're following the rule on the 6 candle rule. So I need to remove that one, and our reversal is still up in here. Japanese yen, this is the area I kept it on because I wanted to see if it kind of acted as a fair price value area, and it is kind of hovering around there. I've not gotten a lot of great trades lately in the yen. It's not really been something that I've found really good opportunities in, so I may just hold off on looking at this until I start to gain some better trend direction. Earlier in the year, we were doing great with the yen when we were just trading the shorts as price would rally. But now that we've kind of started this chop, it's been a lot more difficult as far as finding good opportunities, and so maybe it's just time to take a little bit of a rest from this one rather than try to force some of those trades. So remember that the FOMC meeting is today, and so any breakouts that occur just before that or as a result of the FOMC meeting are not going to be valid breakouts. Remember, we don't take breakouts due to news announcements. We take breakouts when the market gives us the right probabilities, the right setups to do so. So just be aware of that as you go through the day today. If you've got any questions, please send us an email, support@tradersarmy.com. Until tomorrow, everybody, I will see you soon. Bye.